Moving on. What do we see in New York for EU? In New York, let's look at this one right here, this first candle here, the bearish candle. I'm anticipating if this is a bearish candle, how did this bearish candle happen and why am I looking at? Because it did not break anything low to the previous bullish candle. So if I were to look at this wick of this bullish candle, it did not break. So why am I looking for a sell over here? But it's exactly the point. Look at the structure. What is the structure telling you? High, low, high. But then within that, the internal structure is low, high, low. This got broken. This is strong high for me now. And I want to follow the internal structure downwards, right? Always the internal structure. In this case, however, I did not get any sort of entries within this time frame, within this at all. However, now this is where I was saying that it is a bit, not a bit, but quite advanced on how are you reading the price action. We know that this is a zone, right? Clear zone. It is. If I extrapolate this out, it goes to this point here. And it is beyond my strategy at this point in time, which is why there's a heavy disclaimer on this, that this is, if you get confused with structure, please leave this out the way it is. Just follow on the red box, and if an entry does not happen here, just leave it and wait for the next candle to print. But if you're looking at price action, candles are moving furiously fast. There is a lot of momentum. Just observe what is going to happen. What is happening? You have this high that broke this low. It got swept, right? There is nothing on this candle. There is no pullback. There is no zone. There is no break or 3 candles or another candle here that will tell me it is a zone. And then it reacted, right? So let's assume this was a zone here. This is a massive stop loss. I don't know if I want to take that big of a stop loss. Let's see. Maybe it is, how big is that? Oh, it's not bad. It's a 3.7. Not bad, right? But look at where it is reacting from. I would not take this trade unless I see definitely a zone. So anyways, this high now broke this low and then got swept, but this high also on the external liquidity, this high broke all the way this low and then it got swept. It got swept, it kept pulling, it got swept, it kept pulling. Now we are in a solid order block over here. And what do I see? I don't want to take an entry at this point. I want to see if this zone is holding. If the zone is holding, you will get a massive reaction. And that I see, that is a solid reaction that the zone is holding. And if that is opening, you can easily place your trade over here. You could have covered that with 2.5 pip. And these are called precision entries, right? Where SMCs are saying sniper entries, precision entries. I mean, look at this. This is a 2.5 and price just melted after this. Or you could have covered, depending on your risk, your spreads, the broker fees and everything, you could have covered the high just to be safe. And the price just completely melted. And this was what? It did not even hit my break even. It's a 4.19 trade, and if I kept here, it becomes a 6-hour trade, right? Depending on where you place your stop loss. But again, guys, this is an advanced entry. This is beyond the scope of the strategy, but I just want to share with you that liquidation, mitigation of a zone, and a reaction works. Either you're looking at just 2 candles, or you're looking at a larger structure which goes beyond 2 candles. Okay, let's move forward. Okay, here we are where now? Let's look at this box right here. So before we even do that, let's look at this. Do I get an entry here, right? And what is happening in this box? Very, very clearly, high, low, high. The lows start getting broken. The low is definitely broken now. This low is definitely broken with the solid candle. The price went up. All of this is liquidity. It got swept, but what is it reacting from? Nothing. It's a solid candle. I want to see a zone. I'm not touching this. You could have entered, but I'm not touching. Here, if you entered, would have been a loss, a simple loss. But look at this. Where is it reacting from? Here, where is it reacting from? You entered this. It could have been a win, but there is no edge. It's like flipping a coin. It can go either way. So I'm not flipping a coin. I'm not gambling, and I am not interested in this trade. So that's how. Next candle, a solid bearish candle. Yes, I'm interested. Breaking down wicks to the downside. 100% I'm interested. And what do we see? What do we see? We see a perfect textbook entry. You tell me this right here, okay? What do I see? I see very clearly a zone right here. That's a pullback, pull down, definitely a zone, right? Is there strong liquidity? Yes, there is. At this point, this is liquidity. I will tell you why. Look at this. This high broke this low, yes, within the same candle, right? Price went up and then went down and broke this low. So this one candle is responsible for having a strong liquidity at the top, and then it gets swept by this little indecision candle, right? This candle here. Do you want to place an entry over here? Maybe you're not convinced about this liquidity. Maybe you're not convinced about this zone. We wait. We see if there is a reaction. We have a reaction. It is not a solid one that I would have wanted. I would have wanted a stronger body. But if I place a stop order at this, I'm sure there would be momentum, but because look at this giant momentum coming in, right? Look at this. There is no telltale signs that price is willing to change direction. There is nothing. Price is just melting, and I want to be part of that melt. Price is not slowing down here in order to, so I don't see this type of an price action over here. If this price action was over here, slowly melting down, the highs start getting broken, I will not have entered this trade. But given how quickly it is melting, how convincingly it is melting, definitely a liquidity sweep. I placed a stop order over here. What is my stop loss? 2.9. What is my stop loss here? 4.8. You could have done either or. With a 4.8, you have a 1.96. Maybe it goes to a break even. Maybe you take a 1.5. Who knows? You could also do a 2.9, and I always say that I want nothing less than a 3 pip stop loss, and it is a 3 pip stop loss for me here. Actually, it is a 2.9, and then we make it a 3 pip right there. Okay, so if I do that, what happens? We get look at that. We get a 3-hour trade instead of a 2-hour trade. Fantastic. I mean, this is textbook. There is nothing new in this. You have trend, you have a zone, prices moving into that zone within the next candle. So this is the wick creation, because all my trades are catching the following candle's wick, the echo candle's wick, because the echo candle is replicating the behavior of the prime candle right here. You have the liquidity sweep and you have the reaction. What stops you from taking this trade? It's only your fear, right? And the fact of the matter is that if you have that belief that this trend is continuing, you have to execute this. Because if you don't execute this and leave it by fear, and the next one you execute and it's a loss, that's a huge gamble on your mindset. Because the winners you're letting buy and the losers you're getting. Whereas if you execute all of these ones, then over a large sample size, you will win, right? Let's move on to this right here. And again, this is the structure setup, the larger structures that I was talking about. This bearish candle. So we have probably the news, maybe those are giant candles here. And then this bearish came in. So why am I interested in this bearish candle? Because first of all, look at the trend. You have the giant push, bullish push over here. Price went down, went up, went down. It broke this low. This is strong high for me. I want to ride this internal trend. That is all what I'm doing. We are riding the internal trend, and we are riding the internal trend with logical precision that we want to enter after a few criteria are met, which are very important in understanding how market moves. Market moves by mitigating zones where there are orders and reacting from it strongly, so we confirm the direction where the market wants to go. We are not guessing anything. So price starts moving back up. This high broke this low. Liquidity is taken. Price jumps into this. First entry would have been here to see, but no, the next candle broke the high. The entry is gone. Once the high is gone, the entry is gone. I could have entered like this right here. Why I did not enter? 3.5 pips, I could have easily entered this. The reason why I did not enter this is because this is a large zone, right? So price could easily keep creeping up. It could have given me a false signal, crept up, and then melted. So in cases like this where it is mitigating the edge, typically I will not enter on the liquidation candle directly. I will enter to see if that zone is holding. And this is, again, a strong reaction candle. I will take this trade 99 times out of 100. you have a mitigation of the zone, you have clear buy to sell. Yes, it did not mitigate the extreme origin, but you definitely have mitigation with a reaction. So telling me this reaction is holding, right? You take a stop order, you can place your stop loss behind this, you can place it over here behind this candle. Look at this, I do 5 pips, right? But the trade is so beautiful that I will not hesitate taking this trade. And I would never cover the entire thing. That's 11 pips because the candle is convincing. Now, if the candle was somewhere small, I might think twice. But even then, if it's a stop order and this low breaks, then the price is melting because all my criteria is met, right? I enter and we get all the way down to 1.91, right? So this is after hours. You could have within your plan that if you're trading after hours, you're doing 1-to-1. You can have within your plan, if you're trading after hours, you're doing 1.5 instead of a 2, right? So if you can have in your plan that if my stop loss is bigger than 3 pips or 4 pips or 5 pips, I'm not going for a 2R, I'm just going for a 1.5R, right? All of these decisions you have to make in order to define your trade plan. What I'm telling you is the process, what it takes to see this again and again, and my eyes are trained so well that I can immediately recognize that this is something that I want to be involved in. Okay, let's move on. There was nothing in the bullish candle. I already checked it. There was no trade there. But then we had the large wick, and then we had this close over here. Typically, this tells me that there is a lot of bearish pressure, and it took the top of this wick as liquidity and swept all the way back. I'm thinking in my head, if that is such a giant pressure from all the sellers, after taking the liquidity from here, the price is going to continue like this, right? So why am I getting involved here? First, on the 1 minute, price had to go up and melt like this to create the top wick. Yes, this is the wick creation of this big candle right here, the shooting star. If you again look at the larger picture, right? When I was telling you that just always have an eye on structure, what did the structure do? It swept this entire liquidity. Now this is strong liquidity. This is, a lot of guys would have thought this is the liquidity, price would have come in and given me a reactor and placed as limit order. I personally detest limit orders because you're guessing that the market is going to react from that place. I want confirmation to ensure that the market is going in the direction that I want to trade. So I never take limit orders. Price swept this. So imagine if I had a limit order over here marked at this order zone and this price stopped me out for 2 pips and then melted. How pissed would you be? This is insane. I mean, people lose their minds on this. So why risk it? So what I see this, price swept this and had a strong reaction. You could have easily at this point in time placed a short like that. Right, and taken this entire thing to a massive return trend. But again, this is structure, larger structure, a different concept, advanced concept. You don't want to mess with this if you are struggling with price action to begin with and then struggling with the larger action, because at this point in time, the structure has turned bullish, right? So this was the last strong high that broke the low and this got broken. So now the structure is bullish and this should hold, right? Or actually the structure is bullish, so this should break also and we should make higher highs. Instead, we have a sweep of the structure and the price reacted, and if you can read that, you can definitely create good opportunities for you to trade. Anyways, so when I am looking at this now, this candle, this giant wick, I see the wick is created. Once the wick is created, I know this is a zone that I'm interested in, and this would be the zone right here also that I would be interested in. But yeah, so this would be the candle here. So this is the new candle that started, but there is a zone there, right? So the reaction is happening from this zone, and the reaction then from this zone pushed it further down. I'm like, okay, maybe there's indication the price is going down. So I'm waiting and seeing. Price again reacted. And now this is the fresh supply. This box here is the fresh supply that has been created after this high broke this low. This is the fresh supply. We are still within the zone. We had another reaction. So at this point in time, I'm thinking that if this low breaks, this would be the top of my reaction. I could do it over here, or I could cover the entire zone. If this breaks with momentum, I want in. And that's exactly, so this is my EM failed reaction and I want in, and this would have given me a massive return also, right?